Hello, my name's Andy Critchlow. I'm Head of News at S&P Global Commodity Insights, and welcome to the Look Forward podcast from S&P Global. In today's rapidly shifting markets, success depends on anticipating what's next. The professionals who excel are those who can spot emerging trends before they fully materialize. The Look Forward podcast delivers exactly that. Insights to help you prepare for tomorrow's opportunities and challenges. We bring you expert perspectives on macroeconomic trends, capital markets, energy transition, and global trade, with a sharp focus on what these developments mean for the decisions that will shape your tomorrow. This podcast connects you with S&P Global's Look Forward Council, bringing cutting-edge research on long-term trends and transformative market shifts. Together, we're committed to providing the forward-looking intelligence you need to navigate uncertainty with confidence. Hello, and welcome to this episode of the Look Forward podcast. My name's Andy Critchlow, Head of News at S&P Global Commodity Insights, and today we're going to be looking at the fascinating subject of frontier markets, and I am joined by Zahabia Gupta, Managing Director and Head of Emerging Markets Credit Research at S&P Global Ratings. Zahabia, welcome. You're calling in from Dubai today, height of summer. I hope that you're surviving the heat.
Yes, we're used to it. And thank you, Andy, for having me.
Oh, well, thank you for joining us. I've read through your Frontier Markets quarterly highlights report in July. Fascinating read, because so much has happened globally that would impact some of these frontier markets. I think that to kick off the conversation, though, I wanted to just spend a moment to sort of define what we mean around frontier markets, because I think some people get confused between what is a frontier market, what is an emerging market. Can you shed some light on that for us?
Yeah, that's a great way to start. When we talk about emerging markets, frontier markets, what we're really talking about are the different levels of development on the ladder. So on the one end, we have developed economies like the US, Japan, Germany, where we see institutions and capital markets that are quite mature. Income levels are higher. And when we look at emerging markets, and this is the broad umbrella of emerging markets, they are on that path of developing those systems and wealth levels at different speeds. Frontier markets are often considered a subset of emerging markets. The key ways in which they differ from some of the big EMs would be in features like having less liquid bond and equity markets, having economies that are concentrated in fewer sectors or commodities, data gaps, as well as typically lower levels of GDP per capita. So based on that definition, we in our quarterly Frontier Markets publication, we looked at just under 40 frontier markets. So that covers Pakistan and Bangladesh in Asia Pacific, to Ecuador and El Salvador in LATAM, to Lebanon and Iraq in Middle East, Uzbekistan in Central Asia, and then you have a list in Africa as well, including Ethiopia and Ghana.
Reading through the report, one of many facts that really jumped out at me was the statistic that 23 out of 35 rated frontier market sovereigns are stable outlook, which I think is remarkable. I spoke in the last episode to our colleague Carlos Pascual, Head of International Affairs and Geopolitics at S&P Global Commodity Insights, and one of the things that we were talking around is how the world has become more angry. And I think it's quite remarkable, actually, when you see a statistic like that, that's quite optimistic, actually. I mean, what's sort of driving that? How does that 23 out of 35 currently stable. What does that say about the world and the state of the global economy?
Yeah, I mean, so when we look at frontier markets, it's quite a mixed bag. You have pockets of resilience, and then you have pockets of fragility. Um, and within those 23 stable outlooks, a lot of the risks are already baked in. So most of the frontier markets that we have are in the B category. So that's B plus, B, and B minus. We have a few that are rated higher. So we have Uzbekistan, Cote d'Ivoire, and Benin, which are in the double B category. And then you have a few in the triple C and selective default category as well. So in these ratings, with the stable outlook, a lot of the risks, the geopolitical and the political risks, are already captured in. But there are also some positive stories. So that's also important to highlight.
One of those positive stories is Uzbekistan. And I noticed that you have a positive rating outlook on Uzbekistan. And, tied into one of the subjects that we discussed that we wanted to talk about today, tariffs. Uzbekistan on the Silk Road, it's one of those countries that does, potentially look to benefit from tariffs, specifically around its gold production.
Yeah, Uzbekistan is one of the biggest gold producers. We've had Uzbekistan's rating at the double B minus level since we started rating them, and we just put them on a positive outlook. The positive outlook reflects the resilient growth that they've seen, and despite the Russia-Ukraine invasion, and there was a concern that would affect the Central Asian economies, they've in fact actually continued to see growth at around 6%. At the same time, they are proactively following reforms like energy tariff deregulation, state-owned enterprise privatization as well. So all of these things are seen as positive for the rating. And then you have the external factors like gold prices that are also supportive for their balance of payments. So all of that is coming together for them. Yeah.
But it's not necessarily the same story for all nations that fall into this category in relation to their exposure to some of the turbulence caused by US tariffs. Cambodia and Nicaragua were two that were highlighted in the report. Can you kind of talk us through why they may be more exposed to some of these tailwinds?
Yeah, and you mentioned the global environment, right? We are seeing extremely high levels of trade policy uncertainty. We're seeing effective tariff rates that are going to be much, much higher than we've seen in several decades. The direct impact of those tariffs, we see that as being quite manageable for most of the frontier markets. And that's because the median trade or the median exports to the US from frontier markets is only about 1% of GDP. Most of these economies are actually closely tied to China rather than the US. But that said, it's the second round effects that are going to actually have a negative impact on the frontier markets more. And that's through weaker global growth because of the policy uncertainty, as well as the impact on commodity prices that we might see come up from next year particularly. And yeah, as you mentioned, Cambodia, Nicaragua, and some others are more highly tied to the global supply chains. And so that makes these economies more exposed to what's going on with global trade and the changing supply chains. So along with those two countries, the other ones I would also mention are Bangladesh, Nigeria, Cameroon as well. There we see, very high forward and backward linkages when it comes to their manufacturing industries as well as their natural resource industries.
Yeah, they're two very interesting countries that you mentioned there, because in a way they're polar opposites. You have Nigeria, huge population, similar to Bangladesh, but incredibly resource rich. Obviously, a lot of oil and gas, a major player in the African group of countries that are part of OPEC. A country that would stand to benefit from higher commodity prices potentially. Although, if we're talking about oil, we're kind of tightly bound in a range at the moment. But then you have Bangladesh, which seems to be possibly more exposed to that global supply chain dynamic which you're talking about. Can you just kind of break down the firstly how important some of these key commodity prices are to some of these countries, and then maybe just delve a little bit deeper into the situation for both Nigeria and Bangladesh and how it differs from some of the other frontier markets.
So when we look at commodity prices in general, they have been quite positive for frontier markets and emerging markets so far this year. And the reason is that lower oil prices and lower international food prices, along with a weaker dollar, they're actually helping lower inflation in a lot of these economies. We're also seeing that gold prices are being supportive for the large gold producers. So there you have Uzbekistan, but then you also have some others like Ghana, Burkina Faso, that are benefiting from it. But again, the picture is mixed. So for the oil producers, and that includes, it includes Nigeria, which we actually consider more an emerging market than a frontier market at this point. But you have others like Iraq, you have Chad, you have Angola. All of these economies that do depend quite a lot on oil receipts, they are going to see higher pressures on the fiscal and external positions because oil prices have been trending lower. We're expecting them to be at about $65 per barrel going forward, as opposed to $80 last year. And so there will be some pressures that emerge there. For the other part of the frontier economies that are actually more closely linked to the global supply chains and are more of manufacturing countries. So that's Bangladesh, Cambodia, some others as well. There, I think we're going to see a little bit more impact depending on how much exposure they have to U.S. trade, as well as trade with China, because the overall global growth story is going to affect the biggest economies and then have trickle-down effects for these frontier markets. That said, there could be winners from this as well, from the changing supply chains. So we'll have to see which ones of these economies can really benefit from what we're seeing as the broader patterns in trade flows.
Which are the most sort of best poised to benefit?
What we're seeing is that the trade within Global South has been increasing and it's likely to continue increasing. So China is trading a lot more with the Global South than it is with the US and Europe. That's likely to continue. Chinese firms are also investing a lot more into the Global South economies. So that could create a lot of opportunities for emerging markets and frontier markets. We could see a lot more trade flows between them, and less reliance on trade with the US, or more diversification of trade partners. But yeah, it also has challenges because there's a lot of shift, and a lot of these frontier markets have less fiscal headroom to offer support for the near-term pressures that might arise as well.
Is it true that China has really doubled down on the Silk Road, the One Belt, One Road initiative to kind of open up and invest in some of these frontier markets instead of retreating?
Yes, with trade, we're definitely seeing that. We are seeing more trade flows between China and countries in ASEAN, countries in, like I said, the global South, as some may call it. And yeah, we do think that is likely to continue because a lot of these big emerging markets, especially, are becoming big end destinations as well for trade. And so rather than just being for transshipment purposes, they're also becoming a new source.
One of the great kind of curses, I think, of frontier markets has been the perception, real or imagined, of geopolitical risk. What pockets of risk do you see around that now, and what are the bright spots?
Yeah, geopolitical risks are rising, and we're seeing that becoming one of the key risks for emerging markets and frontier markets. We recently had a big flare-up of conflict between Israel and Iran, and I mean, so far the ratings impact has been more concentrated to the countries that have been affected by conflict. So that's been Israel. And from the ongoing Russia Ukraine war, it's been Ukraine that's been more affected. There has been quite a bit of resilience shown by other regional countries. That said, I think, one of the key things there is the duration. So if the tensions were to flare up again between Israel and Iran, the duration of that conflict or the uncertainty would matter quite a bit, which might then have an impact for the credit quality of other sovereigns too. In Africa, we're also seeing geopolitical risks being high in certain places. So the Islamist insurgency has been a risk for Central and Western Africa for several years. There was also the conflict between Rwanda and Democratic Republic of Congo, although positively that has been resolved recently, and so that might show that the easing of some credit risk there as well.
I think that segues very well into the next topic I'd like to discuss, which is funding conditions. And persistently when talking to stakeholders in Africa, sources in Africa, one of the issues that they constantly raise is availability of credit, and the risk appetite of the international financial community to lend into some of these markets, despite the huge potential. Another statistic from the report that caught my eye, that year-to-date government-related debt issuance stands at 157 billion, which is down 37% from 2024. What explains this sort of retreat in terms of lending into these markets?
Yeah, the debt issuance has been significantly lower than last year. And a big reason for that is the market volatility. It is the policy uncertainty globally, as well as the high geopolitical tensions. So that has made issuers in frontier markets quite cautious about going out and issuing right now. There has been a bit of a wait and watch approach. But overall, if you see the yields, things have calmed down since April. So yields had slightly come down to about 11% for the frontier markets where there's data. And that compares to about 13% on average for the last 4 years and 15% in April. So things have calmed down a bit. The spreads between the yields of emerging markets and frontier markets has also reduced compared to last year. So that tells a little bit more of a positive story. But I think ultimately investors are going to focus on individual credit stories and look out for where the credit fundamentals are strong.
And from a rating perspective, we touched on some of the issues that can inform those decisions. But kind of where do you see these markets, for the rest of 2025 and heading into 2026?
Yeah, I would say the risks are to the downside because, as we discussed, trade policy and tariffs, that is going to. I mean, there's already been this duration of uncertainty, and that's likely to continue. The tariffs that have been announced, it's still not clear how long those will be imposed for, whether there will be renegotiations. Those rates could change at any point as well. And so for investors, there is a lot of uncertainty to deal with at the moment. And we'll see how things shape up. So that is one of the key downside risks. There are also less clear signs from the US Fed on which way the interest rates in the US might go, because that will then affect the local central banks in emerging markets and frontier markets and their strategies for interest rate. as well. And it will also affect the exchange rates. So yeah, broadly, we are watching out for more downside risk to emerge. But that said, there could also be, some opportunities, some stories that might be more positive, like we discussed Uzbekistan.
Another positive story is Ethiopia. Can you talk to me a little bit about that?
Yeah, so Ethiopia is currently in selective default rating.
So maybe not so positive.
No, there is a positive spin. So they have been engaging with the G20 Common Framework that has been run under the IMF and the big bilateral and multilateral donors. There have been several years of delays, but it seems like things are headed on the right track. They have been doing monetary liberalization. They have been following reforms under an IMF program as well. So, at some point, they might emerge from the selective default category if they manage to finalize the restructuring of debt. Ghana is a case where we recently upgraded the rating. Well, they were moved out of selective default, and that's because they managed to restructure more than 90% of their commercial external debt outstanding under the common framework.
How successful has the IMF been when it has to intervene in some of these frontier markets and encourage broader economic liberalization, measures to address chronic debt, chronic underperformance, default issues?
Yeah, so I would divide that in two buckets. So one is what we were just talking about, which is the G20 common framework. That has required broader cooperation and coordination between the IMF as well as other donors and commercial investors. And so that process has been going on for a few years for countries like Ghana, Ethiopia, Zambia. And there, it seems like now there is progress that is starting to emerge. When you look at the broader IMF support and the IMF programs, investors often view that as positive for a country's credit profile. And that's because it brings a level of oversight or accountability from the governments to follow certain benchmarks, certain targets under the IMF program. Because there are external funds that usually come with the IMF programs as well, it then encourages other multilateral donors as well as other investors to also lend to the country. So in that sense, it can be positive.
To what extent do the impacts of climate change really affect all these frontier markets now, and how do you factor that into your outlook for these markets?
Yeah, it is definitely a risk that we're focusing on more because it is becoming more visible, and the impact is, well, it's harder to predict. You can have natural disasters, but the frequency of a lot of the physical risk events are becoming more visible. So a lot of the frontier markets are also those exposed to physical risks like flooding, droughts, storms. That's linked to flooding. So yeah, that's definitely becoming something that we're paying closer attention to. Within ratings, it can be captured in the institutional assessment, depending on the readiness for climate change. It can also be considered as an event risk.
Zahabia, this has been a fascinating conversation. I'm impressed by the range at which you can look into all of these diverse economies from around the world, from there in the Middle East. You did mention Iraq and Lebanon as two countries that would kind of fall into this frontier market category. Both different ends of the spectrum, though. Lebanon, very much exposed to some of the conflict issues that we've seen this year in the Middle East. resource poor, I think it is fair to say, although there is some gas offshore which the country is looking to develop. And historically, its banking and financial sector has been, I think it's fair to say, fragile. Iraq, on the other side, incredibly resource wealthy, a major producer within OPEC, big population, but lots of systemic issues which tie back to post 2003. Can you talk us through your outlook for both of those two countries in the region?
Yeah, sure. So we have Iraq at a B- rating with a stable outlook, whereas Lebanon has been on the selective default category since 2020 when they defaulted on their Eurobonds. Both of these countries face security risks. This is both, internal as well as external. So with the Iran-Israel conflict we saw, it's of course had a direct impact on Lebanon because there has been an Israeli invasion into parts of Lebanon as well. For Iraq, we saw that it is vulnerable because there was an attack by Iran on the U.S. base in Iraq when they also attacked the U.S. base in Qatar. So both of these countries have, geopolitically, they have very high risks. Iraq, of course, benefits from the very large resource base of oil. It is a major oil producer. Its FX reserves are very large. But if you look at their investment into the country, it's been very low. And there are some, the structural risks that keep it at still a B- rating. For Lebanon, it's a range of factors. So domestically, the politics has been it's been difficult. There's been a policy vacuum for very long, although now the government has been formed and they are trying to put together a reform program for the country. So yeah, it is a long path for them, but at least the recent political developments have been positive.
Zahabia, thank you. I think that's a great point to end the podcast on. For our listeners, if you would like to get a copy of Frontier Markets Quarterly Highlights, Zahabia, where should they go?
They can go to S&P Global Ratings, the website, or Capital IQ.
Great. Well, thank you very much for joining us from Dubai, and thank you, listeners, for tuning in to this latest episode of the Look Forward podcast. Thank you.